still looking at an estimated 4.5 to 5 million homes that we are short across this country.
Welcome back to Real Estate Mindset. We are definitely not, I repeat, we are definitely not 4 to 5 million homes short in the housing market. In fact, you guys, I'm going to go on record to say this again. We're only about 200 to 300 units short in the housing market. And so what I'm going to do today is I'm going to show you guys areas where inventory right now is absolutely exploding on a state level. We have 2 of the 50 states right now that have more inventory than they did pre-pandemic. And it's almost universally agreed upon that when we have enough inventory, prices will go down in the housing market because of the lack of sustainability and how toxic it's been over the last 3 years. And so despite what the bulls would prefer that everyone keeps purchasing, it's very important that from time to time we understand we need to adapt. I'm going to start you guys by going into some Fed economic data, starting with Florida housing inventory active unit count. So this is the state of Florida again. Now, if you're lucky enough to be in Florida or Texas, I'm going to tell you guys right now, we're going to be the first states that show the largest price declines. The reason that is because we now have more inventory than we did pre-pandemic. It's absolutely astonishing. So right now, as far as Florida, we're sitting at 131,000 active units. This doesn't even count new homes. When we add new homes here, it's way more, you guys. But right now, here's where we're sitting. Okay, so we're sitting right here. Now, right before we entered the lockdowns and the recession, here's where we were at. So again, we have more inventory now than lockdowns. Now, I also highlighted right here, you guys. So this is March of 2019. So we almost have as much inventory as March 2019, which is considered a balanced year. Now, that's not all. So it's not only here in just Florida. The same thing has also happened in Texas. And I'm going to show you guys so many cool things. So right now in Texas, we have about 90,000 active units sitting at right here, you guys. Now, again, this is where we were right before lockdowns. Okay, so we do have more inventory also in Texas, and I'm also going to show you guys how we don't even need as much inventory that we had pre-pandemic because the market, the economy, and the consumer were way different in 2019. So I'll show you guys that here in a second. But again, going back to March right here, this is March 2019, so about 5 years ago. 5 years ago, we had 93,771. You guys, we're only 4,000, roughly 4,000 units off of normal inventory in Texas. Is this not an absolutely wonderful thing? Do me a favor again, you guys, comment below. Let me know if you think this is absolutely wonderful. We made it. You guys, 2025 is going to be an awesome year. Now, when I say the consumer was completely different, understand that in March of 2019, the interest rates, guys, okay, and you can see that right here. This is the 30-year fixed rates right here. The interest rates were 4.06. Right now, interest rates are in the 7. So again, back then, we had interest rates at 4%, okay? Right now, we have interest rates at 7%. So demand is way more crushed right now than it was in 2019. Primary result is the interest rates. So again, 4.06 compared to 7%. In fact, it's actually over 7% right now. And not only that, you guys, when we look at real median household income, which is income that is adjusted for inflation, look at 2019. Look at that. Income was soaring in 2019. Consumers were making more money adjusted for inflation than they were in 2020, 2021, and you guys, in 2022. Real income has gone down for 2 to 3 years. People, listen to what I'm saying. This is insane. In 2019, okay, almost 5 years ago, 4 to 5 years ago, people were making more money adjusted for inflation. Now, granted, obviously, you guys, we don't have updated information. This is lagging. This is only to 2022, so we don't have all the data. But regardless, you guys see my point? The consumer was different. They were making more money, and it was much cheaper to purchase a house. And not only that, the savings rate. You guys, this just updated about 3 days ago. The savings rate plummeted once again to 3.2%. And I wanted to point out that, again, March of 2019, the savings rate was 7.9%. Y'all, the savings rate was double. So again, income was higher, savings rate was double, interest rates were half of what they are now. Not to mention delinquency. Okay, guys, this is delinquency rate on consumer loans, all commercial banks. Now we're higher once again than we are pre-pandemic. Isn't that crazy to you? So Americans are behind on their bills like they haven't been in 10 years, you guys. It actually has been longer than 10 years. Right now we're sitting at 2.62%. Right before lockdowns, we were at 2.32%. So we're higher than when we were. But what I want to point out is the trajectory. The trajectory is telling us that America is suffering right now. Buying demand is crippled because people can't even afford to live. And if you look essentially at the 2 decades prior, it stayed basically the same. So from 2014 to 2019, you guys, it was essentially the same. Slight downward here, slight upward, and then balance. It didn't have this massive skyrocketing upward trajectory like we have right now. So in other words, what I'm trying to do is paint the picture like, hey, we don't need anywhere close to 4 to 5 million units because the consumer and the demand is much different than it was in 2019. But I will admit that we do need inventory for prices to continue to go down. Now, speaking of prices, I hear this all the time. People are like, Travis, when are values in houses going to drop? And the first thing I think of is every single time I hear that, guys, is do you understand how value works? Are you understanding the difference between existing and new homes? Do you understand subdivision analysis? Do you understand how to find a great deal? If you don't understand those things, then I can't possibly answer the question of when prices will go down, because some people will only realize that when A, it's already too late, or B, when it's already in mainstream media headlines. And so that's why this entire time, and I've been talking about this for 2 years, I've been trying to train my viewers how to find a great deal. And I've been doing that for free. So let's go to the Florida state housing market median sales price on Redfin. You guys see right now, even though we have this massive increase of inventory in Florida, not enough time has passed to drop prices, but that's going to change, and I can guarantee you that, at least in my opinion. I guarantee you it's my opinion, right? But right now, median sales price is sitting at $415,300. I wanted to note that Florida as a state, this is macro data. Remember, micro data, subdivision, if there is subdivisions. But it peaked in June of 2022, and it peaked at $410,300, which means in about a year and a half, you made in equity $5,000. But unfortunately, it costs $30,000 to sell your house in Florida on average when we look at closing costs plus realtor fees. So again, $5,000. So if you didn't rush in, based on your emotions and fear of missing out in Florida, congratulations, because now you have triple the inventory options. Congratulations, Florida. Isn't that amazing? But again, we haven't yet seen that year-over-year decline, but I will be definitely keeping my eyes on that. However, in Texas, we have had clear decline from peak. So right now, Texas is saying, again, let me show you guys. This is Texas housing market overview, and this is from Redfin. It is saying that right now, median sales price for Texas is $344,500, and that is up 1.7% year over year. Now, Texas, as you can see here, peaked in May of 2022. You can see on the bottom right that peak was $371,900. You guys, Texas as a state, on average, is down from peak $27,400 or 7.3%. So if you're in Texas, congratulations, because again, we have double to triple the inventory options, and homes are about 7% lower on prices. And this is not even counting new construction. Now, I have a bet going with Melody right now that Texas is going to be in worse shape than Florida. One of the primary reasons I think that as well, first of all, both states have massive new construction. I've been saying this, and I've been pretty much right from the beginning, that the housing market crash is starting with new homes. And we see that in value. And I also called the fact that interest rates are going to stay elevated until we have an economic crisis. Those are all easy things. In fact, the only thing that I got wrong, to be honest, is the recession. I mean, what else have I got wrong? Everything follows the recession. And so since that hasn't started, it keeps pushing it down the path. Now, a lot of people have given up hope. And I want to say, if you're not in Texas, if you're not in Florida, don't stress. The story is still being told. The pendulum is swinging the other way. There's just been too much toxicity, too much greed, fraud, corruption, Federal Reserve manipulating the housing market for things to sustain. Now, I believe price discovery will happen in every single state. But again, I keep going back to the fact it's all about subdivision. But regardless, let's look on a national level and see where we're at with housing inventory as compared to pre-pandemic. All right, this is an article from Fast Company called Housing Market Inventory is Rising Across Most of the Country. Just look at these maps. You guys remember me saying we need elevated interest rates in 2024, spring and summer home buying season, if we were to get inventory. Okay, so thank God that's exactly what's happened so far, which again, I thought and I called and I predicted. Now I'm just going to scroll right down to this map. I'm starting to become a little bit more of a fan of Lance Lambert, to be honest with you. I'm actually liking his data sets. Now here's the 1 year change in active housing inventory. Okay, so this is a shift between March of 2023 and March of 2024. Wait till I show you guys the next map. The next map is insane. But I wanted to show you the states with the most rapid inventory growth, and it's surprisingly not Texas. Texas isn't even number 2, but number 1 is Florida. Florida, sit down. Seriously, guys, sit down for this and understand also it takes a little bit of time for prices to go down. We need inventory though. So the fact that Florida year over year has a 57% increase of inventory without a recession starting is shocking. What we see happening there, you guys, is massive hikes in insurance for homes and massive increases in property taxes. I'm talking like ungodly amounts you can't even comprehend because it's that bad. So 57% increase. Now the Carolinas also doing good. 32% increase in South Carolina, 30% increase in North Carolina. I'd be watching those as well. Now take a look here, guys. Alabama, 33%, which is above Texas at only 30%, which really surprising. And this kind of blew me away. Look at, we're losing inventory in Nevada. How is that possible? I'm going to be the first person to say that Las Vegas has blown my mind. There has been so much consistent demand in Las Vegas. It's just shocking. Like, why? Why are you still buying in Las Vegas? If you bought in Las Vegas recently, please comment below and tell me why. Why do you keep buying in Las Vegas? Why do you want to live in Sin City? It is what it is, but that's one state, huge loss of inventory. Also, look at this. Illinois is also down 5%. New York, sadly, is down 4.3% as well. So this all tells us we have to be very careful at what we're listening to, what we expect in our housing market. Because again, on one hand, Nevada's down 26%, but Florida is up 57%. And so this is really showing us how this housing market really is a tale of two tales. Now, Boise, I'm really surprised. I'm sorry, not Boise, but Idaho is only up 1%. All right, now this map is honestly, again, I got to give credit to Lance on this one. You know, I really do. I love this map. Okay, so this map, and this is probably one of the most important maps, to be honest with you. This is active housing units for sale compared to pre-pandemic levels. So this is comparing March of right now compared to March of 2019. And again, Melody, right? I'm beating you so far. Look at guys, Texas as a state is off 4% from spring home buying season pre-COVID. Pre-COVID spring home buying season. We're only down 4%. Y'all hear me? We are only down 4% in Texas is going to have price discovery, you guys. We got to make it to 2015. Let's get out of this presidential election. Let's start the recession and sit tight if you're in Texas because you're going to get a great deal. Now look at number 2. Look at how close Florida is. Florida's at 13.8. That's March spring home buying season, you guys, of 2019. They're only down now 14%. The bulls are losing the narrative. We have never been stuck in a vacuum. So all of the demeaning comments that we got about supply and demand and the laws and how easy it is to understand, none of those people understood that things change. They wanted that to last like that forever, as if we weren't in quantitative tightening. Shocking. Only 14%. But look at this as well. Idaho, even though it had only that 1% year over year growth, it's still off only 16%. So Idaho is very, very close. So what we have again is we have Texas, Florida, Idaho, and then after that, Nebraska. Nebraska is incredibly close. And for Trey, good news, brother. Good. Look at this. Tennessee is number 5. 1, 2, 3, 4. Yeah, Tennessee is number 5. It's only down 19.8%. So if you're in our Discord, You know Trey. Trey set it up. Trey's a great person. He's the guy that I've been watching to make sure he's safe out there. He's a home buyer. He's in Tennessee. Good things to come, brother. Maybe another year, maybe 2 years. But the thing is, the data is shifting. Either way, he's looking for a great deal. When he finds it, he's going to purchase it. Now, here's where Melody may have me. The trajectory of inventory growth in Florida is, I'm like speechless. Like I'm fumbling over myself because I don't know how Florida has increased like so quickly for inventory. So here's the 1 year change in active housing inventory for sale. This is March 2023 to March of 2024. Now you see the darker patterns is a loss. So there is a couple places that have lost inventory. You guys can see that, and quite a bit of inventory, but most of the places have got massive growth. I'm talking massive growth. And this area right here, you guys, this area right here that I'm circling keeps getting hit by hurricanes. So because this area keeps getting hit by hurricanes, it's more expensive to be a homeowner there. So homeowners insurance, right? Homeowners insurance may have gone up 200 to 300% here, but look at Fort Myers, you guys, and Punta Gorda. Punta Gorda is up 144%. Now, even in the Panhandle, you have places like Milton up 120%. That's around Pensacola. And then you have Holt up 300%. I mean, Florida is exploding. Look at down here, you guys. Here's near Miami, zip code 33037. That's up 171%. Just really, really remarkable how quickly things change. Now, here's what it looks like compared to pre-pandemic. So you can see that Florida is still split. Some areas have exponential growth and are near and above pre-pandemic, and some are not. So it is very, very divided. And I hope by you guys looking at this map, you're really, really starting to understand what I'm saying about how if you do want to get micro data, you got to go subdivision. And again, unless the home is not in a subdivision. So we talked about Texas and we talked about Florida, but what about the other states? What about places like Nevada? Well, I have good news. What's happening right now with inventory explosions is actually compounding, especially if you're in an area such as Henderson or Las Vegas, Nevada, that has bans on Airbnbs and short-term rentals. Well, that's going to help add to inventory. Obviously, that takes time to flush out of the system. Now, in addition to that, also remember, it's like a triple whammy because the golden handcuff effect, it's real. You guys, there's 1, 2, 3 million even people on the sidelines that want to sell their house, and not all of those people will repurchase. Before things were so unaffordable, the net was 30%. So 30% inventory growth from people that sell their house, because again, most people will purchase. But I'm telling you guys right now, a lot of it is going to be speculation sales. That's what we see in Florida. There's so much speculation in Florida. That's what you see there. And remember this last thing, and I'll let you go. One of the biggest challenges, one of the biggest problems during the GFC wasn't necessarily subprime mortgages. People are always subprime mortgages, subprime mortgages. It wasn't good. I know that. I was a loan officer during that time. I know all of the loans. But the bigger issue was speculation and the fact that investors started liquidating their assets in bunches. Now, other than that, guys, I really hope you're considering what I'm saying. Obviously, I've made you a free home buying course. I've poured 20 years of my soul into that course to help you get prepared as we're waiting on the sidelines. I mean, it's literally never been a better time to rent a house. And I also believe we are in store for one of the best buying opportunities, especially in states like Texas and in Florida. And if you guys can, do me a favor, comment below. Let me know if this brought anything out of you. Let us know your intel. What is going on in your subdivision? What is going on in your area? Please let us know. The intel is so valuable in our community. We're helping each other out. Now, other than that, guys, if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.